All right, guys, very excited to get you this video recapping our QQQ and SPY trades from last Friday. As we know, the market has been experiencing a ton of volatility, but with that being said, there have been a lot of moves that we've been able to take advantage of. So we're going to get into two trades that we took, like I mentioned, last Friday. Mander's SPY trade ran 600%. My QQQ trade ran 200%. We're going to give you guys our entries, exits, and exactly what we were seeing before taking these trades.
Yeah, all right, let's do it. Without further ado, so I'll walk you through exactly what I was looking at here. We actually both played puts early in the morning after the open here, so I timestamped the open with the red line here. We both played puts initially. Both got pretty good trades. They went over 100%. I took half out at 100 and then ended up getting stopped out in the second half. But the real trade of the day here was obviously the calls that we both took. Kind of continuing that really strong bullish trend off lows the day before. So I'll give you exactly what I was looking at here. This is pretty much live what I was seeing. SPY, as you see, sold off early in the morning after the close. Found support down here around the 50 EMA. Got this really strong bounce right at 10.05 candle here, back above the 8 and the 21. Continued then your bullish confirmation with the 8 above the 21. So I was really just looking after we saw some support here. You can see it held it with every candle close and the next couple candles. So I was really looking for a pullback to the 8 EMA to get me a good add. So right on this candle here, the 1035, somewhere in here at the 8 EMA tap is where I added. So I took 436 calls at $35 a contract, playing for with my fibs here. I was really playing for this test, which as you can see, we got pretty much perfectly at this 437 level. I gave myself a dollar cushion there, so I took the 436s, hoping that even if we didn't quite get to this 437 tap, that they'd at least get in the money at some point. Kind of just winged that strike, to be honest, but that one really worked out for us here. So I got these at 35 on the 80 MA tap. Obviously, this very next candle gave me great confirmation in the trade, so these went 100% really fast. So somewhere up in here around 11 o'clock, I ended up trimming a half at 100% to give me a risk-free trade for the rest of the day. So really can't complain with that, obviously, right? 100% trade in 25 minutes, then held half position runners, risk-free. I actually held these all the way pretty much into close, but they ran great. So I got out 100% here in like 25 minutes, let these run. You can see we held the 8 EMA pretty much the entire way up. Got this initial test here of the fib and rejected off of that. So this, in hindsight, really would have been probably a picture-perfect exit. But you can see we fell under, held the 21 pretty much, except for one candle here that held this 435.50 price level. That was pretty significant the past couple weeks. Held this with a really crazy candle here. Got a quick break of our fib and then back under, and then pretty much made a head and shoulders on the day, except for this quick little squeeze into the close. But at peak, these went to $250 a contract, which is somewhere north of 600%. Let's see real quickly. 615% at peak. So I didn't obviously get out at peak. I ended up selling the second half at $170 a contract into the close here, giving me net 300 some percent on these, I believe. But just a really great trade, obviously, using our EMA strategy that we practice and preach every single day. This ended up being pretty much the perfect entry that I added on. I wanted to see this confirmation above the 8, right? Obviously, when I'm live trading this, we held the 50, but at this point here, we're looking for our 8 EMA crossover almost, at which point, I probably would have held onto the puts if we got a tap and reject and started falling. Once we got this really strong 2-point candle that brought us back above the 8s, immediately sentiment switches. I ended up exiting my puts the second I added calls right in here. This was really the bullish confirmation we were looking for, right? Got back above the 8 EMAs, started getting our EMA divergence between the 8 and the 21, and then got a perfect test and hold at this 1035 candle, which I entered on.
All right, guys, similar to Mander, I took QQQ puts early in the day. To me, this looked like a very bearish setup. So a setup I oftentimes like to play, right, is a crossover of the 9 EMA below the 20 EMA. The 9 EMA is the blue line. The 20 EMA is our yellow line. And then a break of VWAP. We took this trade. It resulted in about a 20-30% gain. I didn't get the best entry. But what was important is that once I realized that gain, I set my stop at entry, right? So now I can guarantee that this is a winner and that we don't lose money. I'm now also very open-minded to other possibilities throughout the trading day. Obviously, bearish sentiment, things have been pretty, sketchy in the market. Bearish setup early in the day. You're thinking we might have a red trend day, but what makes us good traders and what makes a good trader is that ability to be nimble and to flip on a switch. So immediately when I got stopped out of these puts, I start telling myself what would be the next best possible setup. So in this time frame here, we start to chop a little bit, right? The puts weren't looking too good. The calls weren't looking too good. In live voice, I actually told everybody the only trade that I want to take next is a crossover of the 9 EMA above the 20 EMA and a break of this key resistance level that was not previous high of day, but was where these bodies of these first two candles of the day were lining up, okay? So I knew that this was going to be a significant level of resistance. Over this level of resistance, calls had a chance to pay. I entered this trade prematurely, right? So I took this trade twice. In live voice, if you guys remember, we first entered right here. Huge fake out candle. We got a break of this key level that I had mentioned, but it was a false breakout, right? So then I get stopped out of the position. I got stopped out for about 50%, which seems like a lot of money, but you guys have to remember when you're trading 0 DTE, we size smaller and we give ourselves more opportunity, okay? We give ourselves more opportunity, more of a chance to be correct because of how these contracts fluctuate, and they fluctuate rapidly and violently. So we got the false breakout, we get stopped out, but we're still remaining locked in, testing and seeing if we're going to get this break again, okay? So what happens next? We see this break of the significant level. I entered the trade once again. We have that confirmation of the crossover. Initially, we had not gotten that crossover yet, guys. So this was me being impatient. I tried to jump the gun, and this is all part of trading. But the ability to bounce back, to recognize that just because you lost on one particular trade, it doesn't necessarily affect the next one, is what allowed me to remain level-headed and get this next opportunity. Again, entered these calls here as we break this key level of resistance on this very strong EMA crossover. Not to mention this crossover is above VWAP. So if you think about it, I like to take trades that are above and below VWAP. And what do I mean by that? This crossover above VWAP makes me feel a lot better than playing a crossover below VWAP. Why is that? Because I don't have VWAP as resistance in this case. So very, very important. This is one of the most ideal setups that you will see during the trading day. So I enter the position. I'm a little different from Mander. I don't just trim half at 100%. I like to start realizing those gains as soon as I realize that I'm right in the trade. So as we're working our way up, I'm scaling out. At 30%, I'll take some off. At 50%, I'll take some off. At 100%, I'm scaled halfway out, okay? I ended up exiting this position all the way up here for a 200% gain. So again, a very, very nice trade. And what I really, really loved is that we saw continuation and that we saw the price riding the 9 EMA. This is very bullish. It signals a trend day. A lot of what we've been seeing as of late has been the 20 EMA serving as stronger support than the 9 EMA, similar to the 8 EMA and the 21 EMA. Very similar. They move nearly identical. There's only a little bit of a difference there. It really is preference or what you first started trading with. But for me, this is the ideal setup, but something that's very, very important to remember. And why did I scale out and why did I exit my position at 200%? Although we were still riding this EMA up and things looked really, really nice, strong trend day clearly. When you're trading 0 DTE, time decay is obviously working against you in extreme amounts, okay? So just because, this play is at 200% here, that the contracts are at 200% here, does not mean that the value of the contracts are going to continue to increase throughout the day because of how much time decay is eating at your premiums. So a move, for example, from here, this small little dip here, you got to remember where we entered the position, and this is where a lot of people start to get confused. We entered all the way down here at 341, right? The price was 341. This pullback, although well above our entry price of the underlying asset, not talking about the price of the contract, although well above the price that we entered at for the underlying asset, these contracts are going to lose value significantly. So I start to tell myself, 0 DTE, let's not get cocky. Let's take some profits here because I understand how quickly they can lose value.
That explanation was so great in that he initially got stopped out, and I'll see this so often with new traders, is they take a trade on great sentiment, meaning like his idea here was right. Like he was playing on the break of the high of the open, looking for that EMA crossover, just jumped the gun a little bit and got stopped out. That's going to happen, but I'll see so many new traders get stopped out initially and then just sit there pouting about their loss and then miss the second ideal setup that they just didn't wait for the first time. So I think that explanation was really great in that you recognize you were wrong. You knew you jumped the gun because you entered, kind of like before you got what you were looking for. But you were quick to pull the trigger then once you did get what you were looking for. And you can see that was like a 10 out of 10 setup there where that 1035, 1040 candle tested and held VWAP to the upside. And then the very next one gave you your crossover. So that's really like a 10 out of 10 setup, given that we're playing similar strategies, right? Just like very smally different EMAs, but pretty much the same setup. And you get your crossover, you get your VWAP hold, just an absolute A1 setup there, which then led to you getting 200%, which obviously cancels out your small loss and then some, whereas a lot of new traders will take that initial loss and then be hesitant to pull the trigger on the second one. And then they end up, ending the day with their losing trade instead of getting back in and making those losses back.
Yeah, 100%. And I always preach how difficult it is to get that perfect entry when you're trading 0 DTE. As I mentioned, these contracts are going to be fluctuating a ton. You have a lot working against you. So what we do is we size down, we give ourselves a larger stop. So let's say your position size is $1,000, right? And you use a 20% stop. So if you're willing to lose $200, what I would rather see you do on 0 DTE is size down. Let's say you enter the trade with $500. Now you're giving yourself a 40% stop loss, right? If you're willing to lose those $200. So that makes a lot more sense because a 40% loss on a 0 DTE contract is not uncommon, guys. It happens a lot. So what we do is we try to put ourselves in a position to be correct and to enter the trade that we feel is going to pay. A lot of people will see trades on 0 DTE and they tell themselves, okay, I'm losing all these trades. I'm getting stopped out. I don't like trading 0 DTE because I always get stopped out of all these trades. What they're not doing correctly is they're not even giving themselves the opportunity, and that percent loss can really mess with people's heads. If you're getting stopped out at 20% every Friday, I can't even, Mander would likely say the same thing. The majority of my trades on 0 DTE are going to open in the red, and they're going to be down 10, 15, 20%. That by no means is an indicator of whether or not I'm going to be correct. On 0 DTE, what we really try to do, and oftentimes I'll enter and I'll say no stop loss, right? So no stop loss, but we'll size down very, very small. So from that example I was just using, that would be a $200 position size total, okay? So I'll give myself all of that room because what we like to do is we like to trade the chart versus the premium prices, guys. And if you're trading the premium prices on 0 DTE, you're likely to have a lot more losers than you are winners.
Yeah, couldn't have said it any better. I know this blew a lot of people's minds when I said this on the podcast, but when I'm live trading, besides looking at premiums for my entries, I don't look at premiums really at all, except for then, I have to look at it when I go to exit, but I'm solely playing the chart, which like blows a lot of people's minds because a lot of people are clicking back and forth, seeing their profit loss like live. But to me, that's kind of how you get it in your head to like, panic sell out of a trade. Whereas if you're solely looking at the chart, like we said with 0 DTEs, they're going to be extremely volatile. Like you can see that 2-point move off of Dwyane's initial entry was minus 50% and stopped him out on a 2-point move. Like they're very volatile, but then at the same time, they're volatile in your favor if you're correct. So you don't have to position heavy to still reap really great returns. So it's kind of beneficial to just size smaller, knowing your inherent risk playing these 0 DTEs, and then giving yourself more room to the downside to ultimately see you're not going to time a perfect entry. So if you give yourself room to the downside to then let the trade play out and be right, a lot of times this happens to me pretty much every single ODTE. I'll be down 25, 30%. And then ultimately it ends up going 200, 300% if I was right in the trade, just not a perfect entry. That's going to happen the majority of the times, and you have to be able to position yourself to hold during that quick dip off your entry.
100%. So if you guys have any questions about these trades, feel free to DM us, reach out to us on Twitter. Again, if you enjoyed the video, be sure to like it and subscribe. We're going to start to do a lot more of these. I put out a tweet basically asking you guys if this is something you'd be interested in. The response was overwhelming, honestly. So excited to hear from you guys. And as I mentioned, this is something we're going to be doing a lot more often. Mander, thank you for joining me. Appreciate you hopping on. And I think this video is going to help a lot of people.
Yeah, always a pleasure. And if you're not already, obviously follow the Twitter. Discord's open for entry, links in the bio of the Twitter. And I look forward to doing a lot more of these in the future.
All right, see you guys.